What's going on, everybody? Happy Sunday, Tiger here. Um, so I thought I would do a quick video on kind of the state of the economy at the moment. Now I know a few days ago I said I was going to do a technical analysis video so we can complete our three analysis video series to figure out what to buy and sell. But I thought because it's Sunday, I figured I would change it up and just kind of show you just some fundamental and catalyst events that are taking place right now regarding the tariffs. Okay, I want to show you how manipulation happens in the media when it comes to the markets. I mean, among many things, right? Politics, et cetera, et cetera. Um, but but this is huge when it comes to investing and trading. So just to kind of recap, when we talk about fundamental analysis, remember step number one, as you see here, is where we're looking at relevant catalysts. So I've got some news sources there that a lot of people look at, whether they trade currencies like me or stocks or options or futures, doesn't matter. Okay. I want to show you something. Okay. And then I want to show you some hard data that negates what you're seeing in the headlines. So if I just simply start off by going to Yahoo Finance, and obviously just go to yahoo.com and then it's at the top. So let's take a look at these headlines. Trump officials talk tariffs as the European Union prepares countermeasures and markets brace for turmoil. So look at the keywords there. Markets brace for turmoil. Okay. Let's take a look at some of these other headlines. Tesla bull Ives slashes stock price target 43%, citing Musk and Trump. Another negative headline. Okay, when it comes to Tesla stock, which is obviously a huge stock within the markets themselves. Let's look at what else we got. Investors view treasuries as safer bet amid stagflation worries. So keyword, stagflation worries. Okay, this is what people are seeing. This is what the bulk of people are seeing and making their trading or investing decisions. They're looking at these. These are all negative highlights. Economists cited by White House to justify its tariffs aren't thrilled. Okay, they're not thrilled. That sounds pretty negative to me, right? That might provoke somebody to get out of the markets or short sell, okay, or buy puts in the options market, which means they're betting on a downward trajectory. Let's see what else we got here. Scott Bessent, so this is the Treasury Secretary. I see no reason that we have to price in a recession. Okay. That's a little more neutral, I guess you could say, but it still has the R word. Okay, the R word in trading is kind of like a cuss word. Okay, it's an inflammatory word. They still put that word in the headline, even though that's truly what he said. I see no reason that we have to price in a recession. Okay, so you can really read that either way. You can read that as a positive, or you can read it as a negative. What else we got? Anything else? Dude, our mortgage, how to buy. Okay, blah, blah, blah. Look at here. Wall Street strategists warn messy tariff fallout is ongoing. Okay, negative. That's super negative. Okay, look at this. What to know after stocks worst week since 2020. Okay, negative. It's pretty negative, right? Let's take a look. What else we got? We got anything good on here? Anything? U.S. investors brace for more volatility. Okay, blah 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 blah. So you get the hint. You get the point. What I'm pointing out. Now you could go to any news source. Okay, I just went to Yahoo Finance, but obviously Google has sources. There's specific websites out there. But this is the news. This is the news. This is not facts. What are facts? What are facts that matter when deciding if you want to buy or sell something? The fundamental data, the fundamental analysis that I mentioned, okay? Look, this is number one, what I just did, but number two, that's the important stuff. That's the hard data. That's the projections that the economists do in order to really tell you if a report is good or bad, right? GDP reports, manufacturing services, purchaser manager index, right? Retail sales, inflation, just like you see in the notes there on number two. That's what matters. But step number one is designed to scare the hell out of people. I'm going to show you. Okay? I'm going to show you some real facts and some real data that really negates that. Okay? those negative highlights. So let's just click on over here to my Edge Finder. By the way, a1trading.com is where you can get this. I'm not affiliated with them at all. I just love this software because it takes all of the data that I like to look at and it puts it in one spot in a nice little sequence so that it's just easier on the eyes and quicker, way quicker for me to go through. So let's just take a look at the U.S. economic heat map. So last week we had a pretty good ADP number. Look at the non-farm payroll down here, April 4th, that came out on April 4th. They forecasted 135,000 jobs put into the market, but we actually had 228,000. That's a great number. That's really good for the U.S. Okay, for the markets. And I think that, and not only that, but April 3rd, you had the initial jobless claims. Okay, they projected 225,000 jobless claims, but there was 219,000, so a little less. So that's also good for the dollar. Now we also had a few other kind of surprises, if you will. The JOLTS job openings, unemployment rate, wage growth. Okay, how much money's going into your pocket? They projected 3.9%, but it was only 3.8%. So just slightly negative on the dollar. Okay, and the stock market as well. So unemployment rate, they projected it at 4.1%, but it actually was 4.2%. So slightly higher unemployment happening. Why do I say all this? Okay. I say all this because the headlines don't matter. The headlines are designed to scare you. Think of the Jim Cramer effect. Okay. I know a lot of you, if you're traders, you know who Jim Cramer is. He says one thing, and it's just smart to do the opposite because he's a pump and dump kind of guy, okay? There's a Jim Cramer inverse index out there where you can go and do the opposite of what he does, and it's making a lot of money. So anyway, that's a different story, but just to get back to this. So this is the data that I care about, okay? This is all that economic indicators that I've went over in my my first video, okay, fundamental analysis. But here's what I want to show you to negate what those catalysts that we're seeing in the news. So if I go on up here to the CLT data, remember this is the Commitment of Traders report. This is showing where the hedge funds and the big banks and the financial institutions are positioned. If we look at the very top, what did they buy? Look at that. They bought the Dow Jones. They bought the S&P. They bought NASDAQ. Look at that net change right here, net change percent, okay? 226 for NASDAQ, 2.97, S&P 3.72 for Dow. So that means that last week, which last week for this report is basically 2 Tuesdays ago until last Tuesday. So imagine that week. And this report comes out on a Friday. Okay. So it basically is a report up to the Tuesday, 3 days prior. So just to give you an idea, it's a little bit of a lagging indicator, but it shows you where the big banks are positioning themselves. So I say all that to say this: if they're buying the indices, the stock market, maybe it might be a good idea not to be so worried like the rest of the news will show you. Okay, all those news. If I look at a chart for the indices, okay, that's the Dow Jones right there. So look at this. This is the reality of the last handful of days. Look how ugly that candle looks, that big red candle. That's a big, ugly red candle on the Dow Jones. Okay, so yeah, I mean, we clearly blew past a pullback, and we've actually gotten pretty close to quote unquote recession for these markets. Pretty close. I mean, a healthy pullback is 10%. A recession or a bear market typically starts at 20%. So if I take my little ruler here for the Dow Jones and I go from the very top all the way to the bottom here, look at that. You can see right there. I mean, 14.95%, give or take. Okay, 15. Let's just call it 15%. Is that a recession? Is that a bear market? By definition, no. Okay. By definition, no. It's a healthy pullback, which basically means crab legs on sale. Crab legs on sale. This is where inventory starts cheapening up, and this is why the financial institutions and hedge funds are buying this, because it's on discount. Okay, everybody in the world is selling their stocks, or they're buying puts, which means they want the price to go down on the stock market, and that's also evidenced by the put to call ratio. So if I go find the put to call ratio real quick, I think it's let's find it. There's so many things on here, it's hard to keep track. Put to call, risk on, risk off. All right, bear with me for just a second. Where in the world is the put to call? Oh, here we go. No, that's not it. Give me 1 second. Put to call. Where's my put to call ratio? Growth data, heat maps. Oh, I got so many things here. Price forecast, market. Risk on, risk off. Well, fear, greed. My gosh, where's my put to call ratio? They've changed these things around, and it's hard to keep tabs on where it's at. I'm trying to find my put to call ratio. Market sentiment. There we go. Sorry about that. Okay, so like I said, everybody's buying puts. Look at this. Remember, this is our fear and greed index, the put to call ratio. This is the options market. This is what the options traders are doing. We're way over this blue line, which is high put demand. That's extreme fear. Okay, just think of it this way: the inverse of what this chart shows is actually happening. That means that the indexes are actually going down. That's a humongous disparity right there. When you have this many people buying puts, okay, thinking that the market's going to go down, and clearly it has been. So they've been right recently. But what happens if they get a big gigantic pullback? You know, I mean, if price is down here, what happens if it comes up to here? All right, a lot of them are going to get shook out for some expensive losses. So, you know, you tend to want to follow the trend, yes, but you have to do it smart, and you have to do it based off of the fundamental indicators, right? Number 2. So anyway, that's Dow Jones. Let's go take a look at the S&P 500. Okay, over the last few days. All right, it's freezing up on me. Give me 1 second. Oh, come on now. I hate it when it does this. Okay, let's go back down to my indices again. S&P 500. Here we go. So look, it looks just like the Dow Jones, right? So look at this. S&P 500, bam, down. Dow Jones, and this is my daily time frame chart. So each candle represents 1 day of trading action, the range of that price action for that particular day. So these big giant red candles are from Friday, and there's the Nasdaq right there, Russell 2000. So basically everything, all right, everything is down. But just to go back to the the definition of a recession is on a chart anyway, is a 20% pullback. So let's just go through that again real quick. S&P 500, I'm gonna get my ruler. Okay, the extreme top to the bottom. So we're about 17.5% for the S&P 500. On the Dow Jones, I think we said that was about a 15%, from top to bottom. Yeah, about 15%. And then let's go look at the Nasdaq. Okay, let's see what the Nasdaq is giving us. Uh-oh, Nasdaq, look at that, 20%. We are over 20%. So listen, by definition, the Nasdaq has went past a pullback, a healthy pullback, and it is now in bear market territory. Okay, not recession, but just early signs of a bear market. Okay, there's a difference there. So technically the Nasdaq, yeah, if you had to hold a gun to a lot of people's heads, they'll probably be short selling that, because that by definition is a little bit of a bear market. But in my opinion, it's too early. Okay, it's way too early to start short selling or buying those puts, because they're expensive puts. Those premiums are sky high as an options trader. So, but again, I'm not an options trader. I wouldn't do it anyway. But anyway, yeah, if we're just looking at straight definitions, so far the Nasdaq is technically in a bear market. Let's take a look at the Russell 2000. So these are 2,000 of the 2,000 companies here in the States that are some of the smaller ones. Look at that. We're over 26%. So Russell 2000, Nasdaq, they are technically in a bear market at the moment. So everybody thinks it's the end of the world, right? That's what they think because of these headlines. But you got to remember, they're doing that so that the big banks and institutions can take the other side of that trade, right? Let's go back to our COT data. Remember, look at that. Dow Jones, S&P 500, NASDAQ. The people, the smart money, okay, the ones with hundreds of millions and billions of dollars, they spent last week buying the market, buying the dip, if you will, catching the falling knife, right? That's clearly a falling knife. But here's what's going on. Okay, there's, they're basically doing this. I mean, the big banks, they're buying some here, they're buying some here, they're buying some here on the way down, right? It's called dollar cost averaging in. They're doing that so that they can get a big giant position going, right? So that this thing bottoms out and it starts going up, and then they can buy on the way up, right? That's what they're looking to do. But all those lines over here, this is where a lot of smart traders are buying too. They're buy on the way down. And yes, it puts you into a negative position for a while, but when it goes up, okay, that arrow line I drew up, that's where the money starts to that's where they start jumping into the green, and then they can close their profits out at the top. But we know that because of the CFTC. Okay, they put these numbers out every week. They put them out every week on a Friday around, I think, 3 or 4 Central Time, somewhere in that area, maybe 3:30. I can't remember the exact time, but yeah, it's accurate up until the Tuesday prior to the Friday, so basically 3 days in advance. So again, it's a little bit of a lagging indicator, but if you think about it, large banks and institutions, they're buying, they're investing. They're not trading. They are investing for the longer term. Right? They don't pay attention to 5-minute candles. They don't pay attention to 30-minute candles, hour candles. All the stuff I used to trade until I realized that it was a bunch of noise. Okay, I stay on the daily time frame like this, and then I'll go down to a 4-hour as well. But what I look for is supply and demand candles. Okay, that's what I want to talk about and focus on when I make my technical analysis video. Like I said, I was going to have that be my next video, but I just thought because it's Sunday and because we've had all these tariff scares, I thought I would just show you, kind of how the news, the financial news differs from the hard data and what big banks and institutions are really doing. So anyway, that's it. I just thought I would make a quick video to show that. Sorry about the non-technical analysis video. I will get that out very soon. I had a little bit of a setback the last couple of days, but yeah, I hope this makes sense to somebody. Like I said, if you don't get anything out of this, just remember this, okay? Sometimes you want to observe the news and do the opposite, all right? But you got to use that all-important economic data and those financial reports to make your decisions. I trade based off of data, not by news. Data, okay? Economic indicators. Fundamental analysis, okay? That very first video I did after my 30,000 foot view video. So it's video number 2 on my YouTube channel, Tiger Trading Project, okay? Go check it out. I hope this makes sense. If you guys got any questions, let me know. Otherwise, it's Sunday. I'm getting off here. I'm going to go watch some baseball. Peace.